Joe, lovely to see you, Tracy, as well. You may just need to unmute yourselves. I can see we've gone live over to YouTube. I'm just checking Facebook to see whether it's gone live over there. It's supposed to be going live over LinkedIn as well. So let me just do a refresh. Give me a second. Yeah, it is live on LinkedIn. Yeah, and let's just check on Facebook. Let me do a refresh on that and see where it's gone live. Yeah, it's gone live on Facebook. So we're live over all three channels. I can't check Twitter at the moment. But anyway, welcome everyone who's joining us right now. I've got the pleasure of having Joe with me this evening, who's a real property expert and also mortgage broker. Tracy is very kindly assisting me on the streams in the background and dealing with any chat that comes in. Tracy, you may just want to leave the comments, and also Joe for that matter, the comments visible on your side so you can see anything coming through. If you can see us on Facebook or YouTube, if you could just say hello in the chat and just introduce yourself, if that's okay. And Renato, if you can hear me as well, if you could do the same, if you can log into Facebook or YouTube as well, just so that we can just check it's all working, that'd be wonderful. Okay, so what I'm going to do is share my screen. Give me a second. Right, there we go. So today's topic is how to find and finance the purchase of your dream home. A quick introduction. Obviously, we've already introduced Joe already. He runs a company called AI Mortgages, another company called Cheap Mortgages. Tracy, I think it's fair to describe you as being a personal coach and mentor, and also you specialize in helping people through the menopause as well, women through the menopause as well, I believe, don't you?
Yeah.
So thanks for assisting today. Just a quick introduction to myself. We recently moved house, and a big thank you to Joe as well, actually, 3 or 4 months ago, because of course you helped us with some of that. That was us just a couple of days after we moved in. That's my sister Mary on the extreme right, who came in from Portugal to help us, and that's my lovely wife Wendy. So, and we're in a very tiny village called Horsemondon, which is near Tunbridge Wells. And if you wander into the village, it's like a 4 or 5 minute walk. It appears that nothing goes on whatsoever. And it's a really strange place because everything suddenly comes alive. And last weekend, they had literally thousands of people come along to a 4-day event. And, it's quite very lively as well. So it's great fun to be part of village life down here. Just a quick introduction from myself. I have a very strong sense of mission, vision, and purpose. I love helping other people. Building communities is really important. I also believe in the importance of family, friends, and building on family values. I also personally love helping people through personal and business growth and also wealth growth. It's more of a personal interest. And more recently, I've returned back to my roots from years ago, and that's helping people to buy property and sell their homes. And obviously, as an agent or estate agent, it's about helping the seller to get the best possible price in the shortest possible time. And that predominantly this is done through partnerships and offering personalized marketing, video walkthroughs. And that includes things like drone footage, leveraging platforms such as Rightmove, Zoopla, and On the Market, and of course, social media. And what you'll find as part of these live streams, we'll be talking about all sorts of different topics. One of the things that I 100% believe in is also the importance of wealth creation, and just touching on that. And a number of you may have heard of Rupert. He's someone I fundamentally believe a lot of his principles should be taught in schools and universities. And most people end up in a traditional job. A number of us end up in self-employment in this bottom left-hand quadrant. Where you can start to create real value, though, is when you can create a business which can scale and it's not totally reliant on you. And then the bottom right-hand quadrant is more about choosing other assets to acquire over time. Robert Kiyosaki talks more in the context of acquiring property, because of course you can focus on capital growth there, but you can also use it for creating rental income. But it could also include things like licensing, creating some form of IP. It could be creating some form of software as a service, which creates an ongoing revenue stream. So basically, this is really what I regard as the four pillars for capital growth. So investment in property, as obviously creating a scalable business, helping people very much in that type of space. Also pointing out the importance of acquiring assets, which include gold and silver, because if you look at, for example, the UK economy and what's going on in the US at the moment, I mean, the US has got a colossal national debt, and effectively, if it wasn't seen as the world reserve currency, they would have gone bankrupt years ago. It's just because it is a world reserve currency, you can get away with what it is doing at the moment. And the British economy as well, we've got a $2.5 trillion national debt. So things like gold and silver holds its value over time. It's other currencies, including the pound and the dollar, which depreciate over time against that as assets in general terms. And it's about acquiring assets which create liquidity and diversification. And then, of course, if you can focus on building intellectual property, which has got the basis of creating royalties and license fees, then that's absolutely fantastic. These sessions are mainly focused on the area of buying and selling property, and we will have some sessions probably every once a month which focus on some other areas of either business or acquiring assets, or acquiring assets which have the potential to create revenue. So in terms of today's show, Joe and I will be very much talking about these 6 main areas, and it should be hopefully a very lively discussion. But what I thought would be really nice, Joe, actually, is just coming to for now, really, is let me see if I can go focus back on you, if that's okay. Bear me a second. So there we go. So Joe, if you could very kindly, in fact, tell you what I'll do, Tracy, if you don't mind, I'll just hide you for a moment in the background. Okay, and if you could just monitor the chat as well, that'd be fantastic. You've got to figure out how to do this. There we go. Hopefully you'll still be in the background. Actually, no, I didn't mean to do that. I was about to kick you out, Tracy. So try to do this right. Hang on a moment. Move from the stage. There we go. I think Tracy can still hear us there as well, which is good. So Joe, if you could tell us a little bit about you and what you feel you're really passionate about, that'd be fantastic. But also in the context of how you've developed and grown your business, because you've been in the whole mortgage space for at least 10, 11 years, but I know you've got many other business interests as well. So could you tell us a little bit about Joe and what you do? That'd be fantastic.
Sure thing. Thanks for inviting me on the channel today, Rupert. It'd be interesting to see how this progresses. I've not been on one of these social media streaming channels before, so I hope it all goes smoothly for everybody. But so a little bit about me. I run my principal companies are called AI Mortgages and Cheap Mortgages Limited. Cheap mortgages directly authorised and regulated by the Financial Conduct Authority, and we principally look at residential mortgages, purchases, remortgages, and we also deal with buy-to-lets, helping people build portfolios. We also do commercial mortgages, bridging loans, right across the board, really. And then our sister company is called AI Mortgages, which is more so an online presence down south. Cheap Mortgages more of our northern entity. And then we've got another company called Ideal Financial Advice, which deals with non-regulated financial services. Right. So we've been trading for about 10 years on the mortgages front. I've been involved in...
Interrupt you there a second. On the one dealing with non-regulated products, is that mainly dealing with business finance? Or is that...
It is, yeah. Predominantly, it's business to business, which is invoice finance, asset finance, insolvency advice, those sort of
You've got a
avenues.
very
Yes,
broad range
that's all business to business. Yeah.
broad range of skills and business. And sorry, you were saying about 10 years, you've got about 10 years experience in this overall space. Sorry, and I interrupted you at that
In
point.
mortgages, about 10 years. I've been in financial services for about just over 20 years.
Wow.
So I trained in the city. I was actually a prison officer at the time. And I came out of the prison service to train to be a stockbroker, of all things. So I had a leap of careers, dealing with a lot of crooks on both sides, I think. But you try to avoid them as much as you can. But yeah, I went from the prison service into stockbroking. I trained in Canary Wharf, and I was financial planning. So I was doing pensions and unit trusts, and right across the board, financial services, retirement planning, etc. And then I worked for several banks doing their financial planning. Then went off to the Middle East. I was out in Dubai for a few years, and came back and set up our directly authorised firm dealing with doing residential commercial mortgages.
Right. Wow. Okay. That's really interesting. And in that time, because I know a long time ago, when the whole endowments were very much in fashion, endowment mortgage was very much in fashion, pretty well anyone could actually offer these types of products and services. And now it's extremely regulated, isn't it? And you almost die under the weight of compliance. So I have to say, I admire you for your bravery.
Yeah. I remember when we first started talking about mortgages, and you were telling me that you were involved in the game many years ago, and it was astonishing the amount of red tape that there is now. And I think it was quite shocking for you, wasn't it, when you realised that the depth that lenders go into these days. Talk about belt and braces. It's very, very difficult to get mortgages these days. So using a broker is definitely the way forward.
Exactly. And you somehow manage to take the pain away, or at least you do your best to take the pain away.
Certainly do, yeah.
But I think what would be really nice is to have a little bit of a review of perhaps the current housing market, and perhaps the housing market generally overall first. What's your perception of? Now, I appreciate it's going to be very regional. Up north, it may be very different to what it is down south. What's your perception of where the housing market is now? And obviously, we've got an election coming up as well. What impact is that going to have in terms of property overall in the next 6 to 12 months, do you think?
So I think the housing market, when we had the Trussonomics, everything nosedived. It went very quiet for a few months, but gradually things have got back on track. It's picked up again. So normally in the mortgage game, we're quite quiet January, February, and things start to take off again in sort of March time. This year, however, as soon as we got Christmas out of the way and we were back at the office in January, it's gone absolutely berserk, and I'd say it's back to previous levels. There is still some, obviously we've got the cost of living, we've got the interest rates, we've got the upcoming election. It's causing a lot of apprehension. But I think there have been so many people for so long that have been waiting to get onto the market, first-time buyers or movers, that just thought, I can't wait any longer. There's been the green roots of recovery are there. And I think interest rates have leveled off. Let's just get out there and get stuck in. So it has been busy, thankfully. It's been it seems to have kicked off again.
Yes. Do you think that's broadly speaking because people have got used to accepting higher interest rates, and to a degree they're almost pricing in from their own mind perhaps the next rate is either going to be sideways or possibly a little bit downwards movement? So you think there's a bit more optimism returning?
I mean, we've had it so good for so long. A lot of people were hoping that we were going to go back to the interest rates that we've seen of old, but they're not going to go down that low again. And there's been some acceptance that rates are going to remain reasonably high, especially compared to what they were. And you just can't sit around forever. You've got to make a move. You've got to get on the ladder and do it sooner rather than later. So I think rates will come down. I was hoping they were going to come down at the next MPC meeting. which is where 20th of June, but I'm not so sure now. Since they called the election, I don't know if the Bank of England will be wanting to be seen to be lowering the rates when we've got an election so close. So maybe rates will hold off a little bit further. We'll see.
Yeah, well, that's really interesting. And do you see with what's going on in Europe and also the US at the moment? Obviously, in Europe, you've got a number of elections that occurred over there, and things have gone more over to the far right. You've got our French president who's decided to suddenly call a snap election. You've got all the disruption going on in the US with Biden and Trump as well. Do you see in 3 or 4 months' time things becoming very unpredictable as we get later on to the year? Or do you think
the golden question, isn't it? It is. People are always saying when they're getting involved in property, you know, something's not right. The interest rate's not right. House prices aren't right. I've just changed jobs. There's always something. Brexit, new election. There's always something going on. I would say there's never a perfect time. It's all about timing rather than timing, as they say. So yeah, life is fluid, isn't it? Who knows what's around the corner?
Yes.
But I think people are better off if they're getting involved in property, just to make a decision and stick with it, and get themselves on the ladder rather than waiting for the perfect timing, because it never comes along. No. Is there a lot of instability at the moment? Yeah, there is, but there always is. There's always something. And the only time I tend to see when it is perfect timing, interest rates are low, house prices are going up through the roof. That's the time when you want to be worried about buying, in fact, because it normally means a crash is around the corner. Yeah. And I can't see that at the moment. I think we're at a good stage to get involved.
Right. It's really interesting, that point, actually, because the moment everyone starts to feel a bit euphoric almost, that is really, isn't it, is the big warning sign, big danger sign. And I think that happened really in the beginning of the financial crash. It took a good 6, 8, 9 months before the stock markets really started to be affected, and other industries, isn't it? And but then, of course, we saw eventually what happened. So you're not seeing at the moment any sort of real danger coming up even the next 12, 18 months. Nothing spectacular, unless obviously something comes up with our Russian friends or anything like that. There's nothing you can see on the radar which is potentially exposing the property market to any particularly undue risk at this present time.
No, I think now is the time, if anything, to be greedy. Be greedy when others are fearful. I think Warren Buffett was famous for saying. But there is a lot of uncertainty out there, and there's definitely deals to be done on property.
Right.
There's a lot of talk about the 18-year property cycle. So we're due a dip. I would say we're already in it. I think we've seen drops a lot more than what people have said. I know a lot of people saying, well, there's been only a 5% drop in house prices, but in real terms, you add in inflation, we're looking really at more like a 15% drop. So
yeah, that's true. Of course, we've had very high periods of inflation.
It's been the silent crash, and people are still waiting for it, but we've already had it. We're already in it.
Yeah, that's a really good point, actually. Thanks for that. And obviously, because of your experience in the whole property sector space, it's really interesting because obviously, Joe, because you are looking at things not just only on the residential side, but on commercial in your business, with your business hat on as well in that context, it must be really exciting. But are you finding in the residential market, for example, that there are certain types of property which should be regarded as being high risk, or you would tend to suggest that people would avoid? This is more looking at it initially from a purely domestic point of view, so no normal householder wanting to buy a property, rather than with a view to buy a property to rent it out, for example. Perhaps we deal with it from there. Are there certain types of property you would tend to suggest people avoiding, and any particular good types of properties that people should be investing in?
Well, I think it's the age-old adage: when you're on Rightmove and a deal looks too good to be true, it is. because there's too many people out there looking at Rightmove on a daily basis. I know I do. I invest personally, which probably marks me out as different from a lot of brokers, which is surprising. I'm surprised more mortgage brokers aren't heavily investing themselves when they can. But yeah, I'm looking at the market day in, day out, and I do see properties on there. Goodness me, there's comparable properties in the same street selling for an extra £50,000, whatever the case may be. And before you know it, I'll have several phone calls. Oh, have you seen this property, Joe? I'm like, yeah, but do your due diligence. It's at that price for a reason. I mean, very, very rarely you see a very good deal, a true bargain deal. And by all means, jump on it, but just be wary. I wouldn't say there's any specific types of properties that that I'd be wary of. But I think property that's tied up in leaseholds, I don't tend to go for leasehold properties personally. But it's not to say that flats aren't a good investment. And you know, if you're looking to buy a flat, live in a flat, that's fine. Be very mindful of how long's left on the lease. Anything less than sort of 80 years is troublesome. If you're looking to get on the housing market and you're thinking, I'll buy cheap at an auction, another one, I you know, unless you maybe got a building background or you got a lot of experience. Yeah, I've had so many clients that have fallen foul of auctions. They phone me up, Joe, saw this fantastic deal on the auction. You never believe it. There's nobody else has bidding on it. I've put in X amount and I've won it. I was like, oh dear. So once I've drilled down a bit and Rupert, 9 times out of 10, we get to getting a valuer out there on the mortgage, and it comes up with a zero value. Happens all the time. So why would someone sell a property through an auction rather than an estate agent? Yeah, they might want the speed of it, but 9 times out of 10, there's something wrong with it. So I say to people if they're buying at auction, the first thing you want to do is find out why it's being sold at auction, because often than not, Japanese knotweed, subsidence, heave, the wall ties are falling apart, the roof's about to blow off. There's always something. So if I was a first time buyer, I would steer clear of auctions unless I had the experience to take care of any issues that could arise.
Yes. Yeah, no, it's the truth. There was a case a while ago. Actually, it wasn't that long. It was about 4 or 5 weeks ago. It was a property that appeared. I don't think it was on Rightmove. I think it might have been Rupert actually, and it came on the market. And this property basically had been owned by a paedophile, and someone had drawn graffiti all over the outside of it. And the agent who posted it actually posted exactly as it is. Now, obviously, in a sense, they were correct to do that because, of course, the agents can't lie. Now, as we know, in reality, things do happen. But on the other hand, so many people got really quite offended by it, and it caused all sorts of problems. So the actual platform itself ended up by having to come to an agreement with the agent that they would actually blur out the wording on the graffiti, and they relist it, and actually then basically probably have a headline say something like, this property is for sale with a very dark secret, something along those type of lines. And then later on, it was explained in the copy what actually was. And obviously, now that wasn't in auction; that was actually being sold normally. But that really is quite staggering. Now, you have to be a very brave person to go and buy that house, I think, don't you? In light of especially
it wouldn't be one for me, that's for sure. But
yes.
More often than not, with auction properties, there is a dark secret.
Yeah.
And do your due diligence and find out what that secret is before you start putting your hand up and you get caught under the hammer, because it can be a very costly error if you get it wrong.
I think there is something else which I think people at a very practical day-to-day level have to be really careful. It just as normal, especially first-time buyers. And it was particularly prevalent in the area that I came from, because we just moved, so I explained earlier on, from Purley Croydon area down to where we are near Tunbridge Wells. And around there, they've got a massive amount of new builds going on, huge amount. and a lot of them are going up in massive tall blocks, have got no on-site parking and virtually no street parking either. And these are perhaps being offered with good incentives, or it might be under shared ownership as well. And for example, there's a lovely lady who I see, nothing to do with what I'm doing now, but she was after some sort of really nice window coverings for her apartment. And in fairness, inside it was really nice. It was on the 8th floor of this building, and in like a 15-story block, just being completed. But it's right next door to West Croydon bus station, which also is next door to West Croydon train station, which is also only a few hundred yards away from where all the riots happened years ago in Croydon.
Wow.
And that poor woman, when she comes to sell in a few years' time, along with anyone else in that block, I reckon is going to have real trouble, because not only is it not a very safe place for women to be at night when they come out, but also restrictions over parking. The service charges might be artificially low at the moment, but because it's got lifts and all these other things, those costs are just going to go up astronomically. There's going to be other people who are probably wanting to sell at the same time. So people are going to be buying into white elephants, which is, I think it's a real shame. And I feel very sorry for a lot of first-time buyers, especially at the moment, because unless you're very smart and very wise, you just have to be, going back to your thing about people, things can be too good to be true. You know, there can be good incentives going with some of those buildings, but if you're buying in a massive block with lots of other people, and perhaps, you know, with a lease, 125-year lease, or it might be 99-year lease, it's the service charges that can be the absolute killer, as well as the location. So a lot of it goes down to location again as well, doesn't it? So
yeah, I mean, on that front, I would say for first-time buyers, they want to take advantage of the experience of their conveyancer as much as possible. So there's conveyancers, then there's conveyancers. So a lot of conveyancers are the type of people that won't answer your calls, don't return emails, don't give you updates on a regular basis. And then there's the really good ones at the other end that you might pay a lot more for, but are very good, that will do a lot more due diligence, and that will make you aware of the potential pitfalls of the area. So when they get the searches back, they actually have a good read through and say, you do realize that there's another 200 houses being built on this development, and there's a potential that there's going to be bus stops or train stations nearby, and how this is going to affect your property value. So I always refer back to, you want to have a power team. You want to have the right people around you when you're purchasing property, and a good conveyancer are worth their weight in gold.
Yeah, yeah. And actually that is so important. And because it can be the conveyancers or the solicitors, which can, if you've got a good one, it can make a real difference between holding a deal together, the whole thing falling apart.
Absolutely.
Yeah. I suppose we just touched on it a little bit as well, but one of the questions up for debate, and by the way, people are in the green room, as it were, behind, so Tracy, Renato, Cher as well. You're welcome today, by the way. We'll in a bit later on, we will invite you perhaps to come on if you like and ask any questions as well. I think, Tracy, you're keeping an eye on things too. But what would be good is if you got any questions, ideally, if you log into Facebook or YouTube on the side via one of the links, if you've got any questions there, if you type them into the chat, that'd be great, because it then feeds straight into our platform. We can answer those as well. But see how you go. Just relax and enjoy the session, as it were. But I suppose returning back to the housing and mortgage trap, the others, for example, what do you find percentage-wise people can typically borrow up to now? This again on normal residential. Is it up to about 90%, or can you get higher percentage mortgages at the moment?
So there are 100% mortgages available at the moment. There's a product with Skipton, which is 100% loan to value. If you can prove that you've had a good rental track record for 2 years, and as long as the mortgage repayments are less than what you've been paying in rent, then you could qualify for that. There are 99% mortgage deals out there, but I'd say predominantly for first-time buyers, it would be a 90 or 95% loan-to-value mortgage.
Okay. Yeah.
But those that have got bank of mum and dad in the background tend to put down a bit more deposit, and they'll put 10 to 15%, which is about tops these days, 15% deposit for a first-time buyer. Just because property's so expensive, nobody can afford anymore. So that's where you need to be.
Yeah,
at least 5% deposit, and you'll be fine. The 100% mortgages, you have to jump through a lot more hoops. You'd need to be squeaky clean on your credit, etc. But it is doable.
What multiples are typically used at the moment?
So about 4.5 times income, as a rough idea.
Was that 4.5 times joint, or was it 4.5 times the main income?
Yeah. Less any credit cards, loans, car finance. Car finance hits mortgage applications very hard. So if you're about to buy a car and about to buy a house, buy the house first.
Yeah.
Because if you take out car finance, or it be a PCP, a lease, whatever, it has a big effect on your mortgage application. Reduces your affordability substantially.
Yeah, actually, something which I think when you and I were having some discussions a couple of months ago that I was really surprised about is if, for example, you've got a property which has got $1,000 a year as a service charge, for example, or it might be, $1,000 a year as a service charge, then there might be another, $500 a year for paying for maintenance of the grounds.
Ground rent.
It actually makes a surprisingly big impact on your affordability, doesn't it?
Yeah. It is another cost at the end of the day.
Yeah.
So when lenders are looking at your application, obviously they're going to look at how much your mortgage repayments will be, your council tax, your utility bills, your general cost of living. So banks will go right through your bank statements. They'll look at how much your gym membership is. If you've got any gambling on there, where they really go through it to the nth degree. So you need to be cautious of that, wary of that when you present your 3 months bank statements for the average mortgage application. The loan, car finance, and credit cards, that's the ones that you want to be wary of most.
Do you find that people can get really sensitive and quite precious about some of the things because they feel that possibly their integrity is being questioned a little bit, or for example, you mentioned gambling. If someone spends a couple £100 a month gambling, presumably people don't necessarily want to open up and talk about it, but it's something you do.
But so the amount of bank statements you get these days with gambling or OnlyFans, which we see them more and more these days, it's just a fact of life. Lenders don't like to see it, and they don't like to see an awful lot of it because that would maybe think there's an underlying problem. But the odd bet on the Grand National, for example, nobody's going to worry about that. Lenders don't. But if they can see that you're gambling a lot, even if you're winning, they don't like it. So just need to be careful on that.
It's very interesting, isn't it? I suppose it sort of leads in quite nicely to the next thing. It's really where would you say people can go to for good advice, especially when trust is in really such short supply? So I think things are a lot better now, but it went through a real phase 13, 14 years ago, especially when the banks themselves were found be some of the worst culprits out there. Even the very people who you thought you could trust, which was the bank manager, actually in reality they'd gone right down the slippery pole as far as many people are concerned. So, and you've got also this other thing. It's really interesting because obviously you and I've had a number of discussions. And to me, one of the big benefits of someone like you is that you're a whole market broker. And you haven't got just more experience on residential, but also business and commercial, and also got a lot of business experience, business understanding as well. So where can people go to get really good advice, would you say, which is unbiased, which can be trusted? Who should people go to?
Okay, so generally speaking, there's two types of brokers. There's a panel broker, and they will come under a different authority that manages the regulation generally, and they might deal with 50, 20 or more of the most popular lenders, if you like. And then you've got whole of market brokers, which will deal with, as they say, everybody in the market. So we, for instance, deal with over 200 lenders. So, of course, anything that's a bit quirky, and Rupert, let's be honest, most applications these days have got a quirk to them. Everyone's got a bit of a story one way or another.
Yeah.
I would say go to a whole of market broker, because if you don't tick every single box, then often than not, you can't get a mortgage. Whereas if you go to a whole of market broker, they're much more likely to find it could be a specialist lender that a panel broker might not deal with. Then it certainly provides you with a lot more options.
Right. No, that's really good, isn't it? And how about it's interesting because we've literally just completed the property, as you know. You were very helpful for us at the time as well during that process. Now, admittedly, we'd got our ducks in a row, but I set a goal to the builder who we were buying the property from. We said we wanted to exchange in 2 weeks, and we wanted to complete 2 weeks later. So we actually gave the dates that we wanted to exchange by at the very beginning when we made the offer, and also the completion. And I said to the builder, look, because the reason being is our lease was coming to an end on our rental property, and we didn't want to get caught into another 6 months rental.
Sure. Yeah.
So we also then made some good soundings about solicitors, and was recommended 3. I spoke to all 3, and I asked the same question. Each one, one of the key questions was, I said, look, if we say we want to exchange contracts on this particular day in 2 weeks' time, and the date I gave them 2 weeks, and then it completes 2 weeks later, on your side, can you guarantee you'll do everything you can to make sure you will do that for us? And then the solicitor said yes. Now, which is great. And I have to say, to their credit, everyone stuck to the timeline, absolutely staggering, to the day, literally to the day. But I mean, I suppose because of my past experience a long time ago in a estate agency, and obviously now, I know really when the machines are well oiled, both in terms of mortgage funding, lawyers, making sure all the searches are done, all the usual stuff. There's no reason why it's necessary to have extended delays for exchanging and completing contracts. And it's probably because I'm an impatient little git, to be frank, or a short ass, or you choose to call me. But in reality, have you got any tips for people that people can do?
Well, sorry, to respond to that, Rupert, I think that you were exceptionally fortunate to get that through on those timescales. It's very rare that things can go through that quickly, and that's probably down to a little bit of luck and a little bit of Rupert, I would say, because I know that you are, once you've got the bit between your teeth, I bet you're phoning the solicitor 3 or 4 times a day, jollying them along. But yeah, congratulations on getting that through. You've done a fantastic job there. So go on, what was your question? Sorry.
No, I think the real thing is something that's I've found a little bit disappointing, and this is not my own personal experience so much, because I have a good experience, but with other people I've been speaking to, is because people are, in fairness, we're all individually to blame, because we want things done always at the lowest possible price. And of course, there's lots of conveyancers out there and lots of solicitors out there where there's no real sense of urgency. And you may have got a chain which you're trying to hold together. You've got to people got to exchange and sign and complete.
Yeah. And your transaction was reasonably straightforward.
It was.
But it doesn't take a lot to make the process a lot more time consuming than people anticipate. They were saying 12 months ago the average conveyancing time was taking 3 months. I don't think it's quite that bad now. We generally get something done in a month or 2, but nonetheless, if anything comes up, there's a conveyancing issue, a right of way, something that comes up on the searches report, or a misspelling on the title's not been registered correctly at land registry. These things can take an awful lot of time, and it's then that the paying a little bit more for your conveyancing would pay off hugely, because especially with the likes of free legals, that they're often not the fastest at carrying out the conveyancing process for you. So again, going back to my point earlier, having a good conveyancer, it can pay you dividends, especially when problems arise.
Yeah, exactly. And again, it goes back to using the right mortgage broker as well, doesn't it? Who's got this understanding of the market. Exactly. So I suppose we just have to ask the right questions before we make an offer on a property, really, and just make sure everyone's well aligned with it. But we can do a lot to help.
A good quick test is to test them out. Is phone your broker at different times of the day when you've got these questions. Do they answer the phone? Do they come back to your emails? The same with conveyancers.
Yeah,
and you'll sort the wheat from the chaff very, very quickly.
Yeah.
You'll hear a lot of hold music and answer machine messages before you get hold of a solicitor that answers the phone to you on a regular basis. And then you know you're onto a good one.
Yeah, exactly. Thank you. That's perfect. Now, also just moving more onto mortgage types really now. And by the way, Tracy, Renato, anyone else on the live streams at the moment on Facebook, YouTube, LinkedIn, and hopefully X or Twitter, do ask your questions. If technology is working, we should see the questions pop up in the chat here, and then we'll be able to either directly answer it to you, or we're to answer it in the chat afterwards. And Tracy, if you've got a question in a minute, it'd be lovely to hear from you or Renato. So by all means, be ready for those as we come near the end of this session. But what I'd be really interested to hear as well, Joe, is could you just explain for those people who perhaps are a little bit newer in this space, or perhaps are first-time buyers, you know, broadly speaking, what type of mortgages there are out there, and you know, what type of questions people should be asking.
Okay, so generally for first-time buyers, they'll be looking at a fixed-rate mortgage. I mean, there are so many types of mortgages. It's quite baffling to a newbie. You've got tracker rates, you've got discounts, you've got variable rates. The list goes on and on. But if you're a first-time buyer, you want to be able to work out your costings on a monthly basis. And a fixed rate mortgage will allow you to do that because you'll know exactly what you'll pay in per month for example, a 2-year fixed or a 5-year fixed. So you can work out your outgoings for 24 months, 60 months, know exactly where you stand. Whereas if you go with a variable rate, that can obviously go up and down, as does a tracker rate, which is also variable. A tracker will simply track the Bank of England base rate, and it'll either be sort of 1% below the BOE, but it still goes up and down as would a variable. So trackers generally what people go for these days.
So these days, it's very very unusual to get interest-only mortgages now. Is it virtually always repayment, or do you get any investment-related type mortgages now, like the equivalent of what was endowment type mortgages? Are they've got a thing of the past now, or what's
so kind of, yeah. I mean, they were very popular some time ago. The problem with interest-only mortgages is you're not paying off any of the capital balance. So you take out an interest-only mortgage now and you think, oh, I'll take out a 25, 35-year mortgage on interest only. What happens at the end of that term? Because before you know it, it comes around. I've got umpteen clients that have come to me over the last few years and said, oh, I went to see a broker 20 years ago, and he said, oh yeah, go on an interest-only mortgage. And now I am age 65. I've got 4 years left to go, and I owe £250,000 all day long. I'll have those sort of calls. And yeah, it's tricky. We do find solutions. There are ways around it, but generally speaking, get a repayment mortgage on your residential. If it's an investment, if it's buy-to-let, completely different kettle of fish. Interest only is the way forward on your buy-to-lets. Yeah,
and that's really interesting. In fact, that you must have read my mind, because that leads directly into my sort of final question, really. And if someone's more into property investing with a view to letting out a property, are there what type of options are there available now? Is it typically up to about 80% that you can borrow against a property which you're buying as an investment? Or have you got any top tips you'd recommend around that?
Generally speaking, it's 75% loan to value.
Okay.
That's the norm. You can go up to 80, 85% loan to value, but the rates are, you're going to pay a lot more for the higher loan to value. So generally speaking, as I said, I invest myself, and we generally go for 25% deposits, and we go for fixed, interest only. I tend to go 5-year fixed because 5 years are currently cheaper than 2 years, and inverse of what was in previous years. General structure for buy-to-lets. So people used to buy their property in their own name, but then Section 24 came in, and they were getting taxed on the income, not just the profits. So that's led, most applications these days are through limited companies. So a quick overview on that, because that's my baby really. We've won buy-to-let broker of the year the past 3-4 years now. I was trying to point out my trophies behind me, but all you can see is a brick wall.
That's right.
Buy-to-lets, yeah, we love helping clients build their portfolios. So generally speaking, it will be set up a new SPV, which is a fancy word for a limited company, get the right SIC codes, classification codes in place, so banks will recognise that this company is just being used for investing in property. Get your bank account sorted, and off and away you go. So the great thing with buy-to-lets, of course, is it's not so much judged on your personal affordability, although lenders do like to see a bit of income in the background. It's on the deal itself.
Right.
So, you could be earning, say, 25 grand a year, but buy £1 million property. As long as you've got the deposit there and the actual deal stacks up, then that's what the banks are going to be most interested in.
Yeah. If someone's, say, in a property rental at the moment, and they're wanting to buy a property with a view to investing, am I correct in saying it's quite difficult for people to be able to get buy-to-let mortgages there because they don't like it if you haven't got a mortgage on your own property, or you actually physically don't own your own home?
So yeah, to a degree, a lot of lenders would prefer you to be a homeowner before you start investing in other properties, but that doesn't preclude you. There are lenders out there that will say you're a first-time buyer, first-time landlord, and there are lots of circumstances where that fits for people. You could be on a decent income but overseas, or working away from your normal place from where you live ordinarily with your parents or whatever. You just want to get on the housing ladder. So yeah, they will make exceptions if you're not a homeowner.
Okay, it's interesting. I'd say there are opportunities out there for people who actually just choose to be much more personally mobile in terms of where they live, but still actually go into the path of property investing if it appeals to them. So
sure, yeah, it doesn't rule you out. I mean, there's another podcast that I follow called Property Hub, and they deal with hundreds of millions of properties purchases per annum, literally. But one of the guys, they're called Rob and Rob. One of the guys, Rob, he actually rents a flat, so he doesn't own his own home, so to speak. But he's got a huge portfolio of properties.
Yeah.
So as long as your story in the background adds up, then that's absolutely fine. I spoke to a lady earlier actually, and she's not a homeowner, but she's looking to purchase, get involved in HMOs, houses with multiple occupation. And I said, yeah, by all means, we can get this done for you.
Yeah, lovely. And just touching on HMOs, we have to be careful not to fall into these buzzwords, don't we? But
sure, yeah.
Yeah, what would be good actually is, in fact, Tracy and Renato, I'm going to bring you in here as well. If Renato, I've seen your question there, so we'll answer that. And Tracy, you might have a question as well. What's HMOs can be quite a good investment opportunity if you're in the business commercial space. Sorry, not commercial as in commercial property, but as in wanting to buy to let. Have you personally, if you don't mind me asking, have you personally got any HMOs yourself? Or
I don't get involved in HMOs, but they are very lucrative if you get them right. So imagine you've got, let's say, a 4-bedroom house. You could rent that out to a family for, say, £1,000 a month. But if you had it as a house as HMO, then you could possibly turn the living room into another bedroom, and you could let it out as a 5-bedroom HMO. So if you let it out for a few £100 per room, obviously overall you're going to make a lot more income on it than you would as a single let. That said, a single let, you've got one family to deal with, and if something goes wrong, you only got to deal with one family. If you've got 5 people in there, when things go wrong, they can go horribly wrong. But you're rewarded for that extra work and effort that's required of running an HMO.
Right. Yeah. Thank you. We've got a really good question, actually. In fact, let me bring that up on the screen. This is Dave. Hello, Dave. How are you doing? It's nice to see you there. I think I don't know where you are, whether you're on. I think you're on YouTube, aren't you, at the moment?
I can see 2 questions there. Do you want me to zip through them both quickly?
If you could deal with Dave's first. David's
okay.
question. David Richards. Can you see it on the screen in front of you?
Okay. Yeah. So, David, is there a minimum time for limited company SPV to be trading? No. On my first purchase, using an SPV, I set a limited company up online, and we got the bank account. I did an online bank account within about a week, and that was it. We were off and running and applying for mortgages. So lenders will often say, can we see some track record of the SPV? Can we see the company bank accounts for the past 12 months, for example? And we say, well, it's literally only been open a week. I can give you a bank statement to show that the SPV is there, and that's it. So I've never had a problem, and I talk an awful lot of people through how to set up SPVs, getting the correct SIC codes, how to obtain the bank accounts. Believe it or not, that's not straightforward either. And lenders will be fine with a brand new SPV, no problem at all.
Right, lovely, thank you. And I think Dave's asked a follow-on question, and he says basically how are the deposits determined?
So generally speaking, it'd be 25% of the purchase price. So if you're looking at £100,000 property, obviously it's 25,000, 25%. That's how it's determined. If you want to go up to a higher loan to value, that is possible, but you'll be paying a higher rate.
Right, lovely. Great. It's a great response, Joe. Thank you very much. Right, so I'm going to bring Tracy and then Renato. Renato, if you have your question ready, that'd be lovely. Renato, don't worry, switch your camera on. It'd be lovely if you can. But Renato, you asked a question about council tenants, didn't you? So did you want to tell us a bit more?
Yes, I did, Rupert. So good to hear all so far, and just think of those I've helped over the years to suddenly realize, why are they paying a rent for the council home they've lived in for a long, long time? They have the savings. They'd need a little more help, true, of a mortgage, but is it the right time for them to go for buying the council home, especially while they get a discount because of the years they've lived in it and paid rent? So good to see if they can be some of the clients helped, Joe.
Good question.
Yes. I mean, right to buy, as soon as I get a right to buy inquiry, we know it's going to be a slam dunk, generally speaking, because the discounts are great. So, for example, we've got a client on now, actually, that called us the other day about a right to buy. They're getting great discount on the property purchase. So they don't have to put down any deposit. So let's just keep the numbers easy and say it was £100,000 purchase on a right to buy, 35% discount, £65,000 mortgage, no deposit needed. Not only that, but we can borrow more than 65,000. So we can borrow an extra 10,000 for home improvements. If you want to put in a new bathroom and kitchen, for example. So it's a no-brainer. You own the property then. You've got an asset to pass on to your children. You don't have to worry about how you're going to pay. Because obviously the problem is when you retire, where's your income coming from? Well, to pay your rent, etc. So you've got a lot of peace of mind. If you can buy your own property, pay it off, it's yours. in retirement, and you've got a legacy to pass on to the children. So is it a good thing to do? Absolutely.
Yeah, lovely. Thanks for answering. Great question there. Tracy, is there a question you would like to come in with? And actually, by the way, if anyone else is anyone else on YouTube, Facebook, LinkedIn, etc., if you've got, or Twitter, if you've got any questions, just type them in. Hopefully, we'll be able to pick them up here, and we'll try and answer that. And in about 10 minutes, we'll call this call a wrap. So I think, David, you got one final question. Sorry, Tracy, I haven't given you a chance to ask, actually, but I'll just do what David's quickly.
Yes, it's related to the council's one, so do you want to do that one first?
Yeah, good. So let's do, that's Dave's question. Are there any tie-in periods for as far as councils are concerned?
So the tie-in from the council themselves or the mortgage products we talk in? I can answer both. So
yeah,
if it's a fixed rate mortgage, obviously it's a 2 or a 5 year fixed rate. If you're talking about the tie-in with the council, then that's the preemption period, which is the time that the council can reclaim a portion of the discount under the right to buy scheme, which is generally 5 years.
Okay, that's lovely. Hopefully that answers your question, Dave, on that one. Tracy, what is your question?
Yeah, I'm asking on behalf of my daughter, actually, because it's something that I want her to start thinking about. She's 18 at the moment. What sort of things should she be doing now to make it easier for her to purchase in the non too distant future?
Okay, so I would say what a lot of people are not doing these days, and I didn't when I was a kid, is guard with your life your credit score. Is pay everything on time. Don't take out any credit that you can't afford. Don't over leverage yourself. So be very careful with credit cards. Don't take out any loans. Don't get car finance. Pay your bills on time. Start saving, and don't pick up any bad habits with your borrowings. But that would be principle.
Yeah, presumably it helps to have some form of past history as far as credit is concerned. But presumably what you're saying there is, if you're going to go for mortgage finance, for example, then just make sure those things are paid down before you go to the lender. Is that correct? So if there's a bit of a history there and there's positive, then that's good. Is it fair to say or not?
Yeah. So having credit is not a problem. It can actually, really help your credit rating. It's just proportionate. You don't want to have a high debt to income ratio is what banks will look at. And unfortunately, Tracy, as you and I know, when you're young, you want all these flashy things. But when I'm meeting with a client and they turn up in a brand new BMW that they bought last week, I know that their dream home might not be around the corner as they expected due to that purchase. So if you are gearing up to buy a mortgage, just make sure that you don't overlay yourself with expenses. And then 3 months leading up to the mortgage application, just make sure you've got all your pay slips ready, your bank statements, that you've not got any silly purchases on there if you can help it. Just be sensible.
Yeah. Okay. No, that's lovely. Right. Well, thank you very much. Thank you, Tracy. Great question. I'm going to just show a few quick slides and then we'll call it a wrap in a moment. Joe, you may want to have your links ready as well in a minute. Let's put them in.
Sure.
In a minute, when you've got them, if you just post them as a comment,
it
should end up by going on YouTube, Facebook, and LinkedIn.
Okay, great. Yeah, sure thing.
Okay. So I'm just going to share my screen again if I can figure out how to do this. Spare me a minute. No, it's not that. Let's try this. Oh, there we go. Got it back. Right. So we've been talking about all these great things now. And Joe, thank you very much. You've been I think it's been really interesting what you shared. Next week, I've got another guest joining us, a guy called John Whitehead. He's got a lot of experience of the agency sector, especially. Previously worked for Countrywide for a long time as an area manager, and more recently joined as EXP as a personal estate agent. And we're going to be also sharing lots of stats about the current market, discussing about the whole aspect around prices, whether they're dropping, staying the same, rising. Also looking a lot more at property, but this is looking at more from if you're a potential buyer or seller. And we'll be discussing which places are best to live in, which areas are regarded as being potentially very desirable, and also be looking at how you could potentially, I wouldn't say stage your home because that's a little bit further on, but prepare your home for sale. So for example, if you're wanting to move in 2 years' time, you may want to think about improving the decor of your home, and looking at general maintenance to make sure you're going to be displaying your property in the best possible light. If you've got a bit of a run up to it, then obviously you're going to be able to potentially improve the market value and the saleability. So we'll be discussing that quite a bit as well. And should we look at the whole area about property investing again as well? So they'll be looking from a little bit of a different angle. And a quick little bit more information on myself. If you wanted to reach out to me, do feel free to do so. I can direct you to one of 2 sites. One is dealing with the sale of buying and selling property, and the other one is very much to do with about personal business and growth, wealth growth coaching. Those are my personal contact details there. If you do want to have a conversation after today, just simply drop me a call, text, or WhatsApp message, and I'll be very pleased to pick up with you, or email me on that address there. And those are the links for social media. And Tracy, if you've got any links you want to put in the chat, by the way, do feel free to do so. So now, Joe, have you got your links ready? I don't think I can see them. You're muted at the moment. I don't think I can.
Yeah, how do you want me to drop them in?
Sorry, you should just be able to copy and paste them in. So if you open a copy of a Chrome, for example, copy the URL, paste it into the chat. Also, we can share it as part of the stream, which would be lovely. Yeah, so just giving Joe a little bit of a chance to do that as well.
I've dropped them into the private chat. Not sure if that helps.
Yeah, just put in the general chat if you like. If you're happy, unless I can see it in the private chat. Yeah. Okay, so let me just try and go back to where we were a second ago so we could see everyone here again. Bear me a minute. There we go. So, Tracy, have you got any sort of final questions before we call it a wrap?
No, I seem to be good at the moment, I think.
Okay, lovely. All right, so, I can see you've done it in the private chat, haven't you? I'm just going to see.
Yeah, I've put it on the Facebook. Sorry, the YouTube as well. I'm not sure if that's worked.
Right,
but
there we
you
go.
can copy and paste it for me, maybe.
Yeah, I've just done it. Okay,
thank you.
It should be coming out on the feeds now. So, well, very much like to thank everyone for joining in today. Joe, very grateful to you for your very generous contribution. Tracy, thanks for being a little bit of a guinea pig with me today. I was a little bit in trepidation today because I've used this technology. Oh God, during the pandemic, we ran 65 live streams over 15 months. But I haven't used this technology for about 2 or 3 years. I think, crikey. And it's amazing how much you forget.
Yeah.
But anyway, pleased to say I think it's all worked. So the only part I've got to suss out is Instagram. But next week we should have that all sussed out and working. But Joe, thank you very much indeed. If anyone wants to reach out to Joe, do just drop Joe a WhatsApp message or a text. And I know he'll get back to you. But you're a very busy chap, aren't you? So I sure you appreciate that rather than direct phone calls that couldn't be avoided. But
that's fine. That's fine.
Also, Dave, thank you very much for your questions. Tracy as well, Renato. Okay, and if you're watching a recording of this today, just put your comments into YouTube, LinkedIn, or Facebook, and one of us will try and pick up on that and reply to you. So thank you very much, everyone. Lovely seeing you all. Thanks ever so much for taking part. Take care. Bye-bye. Bye.